Good afternoon and welcome to NYFP. In midday trade on this Friday afternoon, we are seeing the major U.S. stock averages in the red with the Dow still down by over triple digits. Joining me now is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me.
Nice to be back.
Well, right now, if we look at the big board, we're seeing the Dow and the S&P 500 off of record highs. Now, given that it's been a busy week for earnings and we have an even bigger week next week, but focus turns to the Fed and U.S. jobs as well as GDP. So what do you make of today's action?
You know, I think today is all about the fact that investors have already digested earnings. And of course, you know, moving into next week, as you indicated, it's a very big week in terms of the Fed, in terms of economic data. And I think so there's a little bit of nervousness going into next week, and people are taking some money off the table. Basically, you know, nothing has really changed. The earnings season so far is still pretty good. We're seeing the majority of companies reporting earnings that are beating expectations, and while the revenue factor still remains somewhat precarious, I kind of suspect that it's still going to turn out to be a good earnings season. But, you know, next week we'll be looking at the Fed. And, of course, with some of the economic numbers this week having beaten expectations, I think the fear out there might be that the Fed might become more vocal in terms of trimming talk. And so investors are being somewhat cautious going into next week. Basically, I just think it's investors taking some money off the table today. I wouldn't be a bit surprised to see most of these losses being cut by the end of the day.
Okay, Peter, well, you've given us your expectations for the jobs report and next week's Fed meeting. And while we're on the topic of central banks, I do want to mention that we get the Bank of England as well as the ECB on Thursday. But in terms of central bank action and stimulus, we saw Japanese stocks, the Nikkei, down by over 3% in the session as the week ended. We're also seeing a stronger yen. We saw inflation figures higher in Japan. So given that we're seeing some of that translate in terms of stimulus measures, what do you expect to see going into next week?
Well, you know, as far as Japan is concerned, this is the first time, in many, many years, where we actually saw the core rate of inflation move up by 0.4%. That's an indication that maybe Japan is finally getting out of this deflationary mode, and so that the Babi's stimulants are beginning to work, and obviously that's strengthening the yen, and that's why we saw some real weakness in terms of the dollar. But as far as the central banks are concerned, I kind of think that, you know, we're on hold with the Bank of England and certainly the European Bank for some time, and I also believe that the Chinese are probably going to have to move on rates, that is, loosen credit. So any surprises that we get will come out of the Bank of China and not out of any other of the central banks.
Okay, Peter, well, last but not least, before we wrap it up, next week brings a lot of economic data out from the U.S., some of the data points that you mentioned, and we also get global PMI manufacturing data out from the U.S., the U.K., the Eurozone, and China. So we'll be monitoring those figures closely. How important do you think they will be?
Oh, they'll be very important. You know, we don't only have the PMI data out next week. We have a slew of economic data, beginning with consumers' confidence, personal income, spending, and manufacturing, ISM manufacturing index next week, all of which are going to be very important. But the key obviously remains the employment data. And again, we'll see growth, but not excessive growth. We're not going to see any major drop in the unemployment rate, and that should keep the Feds on hold until the end of the year. They'll probably move sometime in the first quarter of 2014.
Okay, Peter, well, thank you so much for giving us your expectations for the upcoming trading week, and we'll speak again on Tuesday.
My pleasure.